All right, so welcome back in. Today we're going to dive into Bitcoin, and really, is Bitcoin the same kind of investment opportunity as it was in 21, but now in 2022? There might be some different takes on that, and it's going to be a fun one today. My name is Paul Barrow. Welcome back to Tech Path. Joining me today is Naomi Brockwell, who is the creator of NBTV Media. Great to have you on the show.
Thanks so much for inviting me to speak here. I'm excited.
Excellent. Naomi, we follow you. We love your channel, and we've had a chance to kind of see your input on the crypto space in general. And I love your insights, and I wanted to kind of have you on the show to pick your brain a little bit on a couple of things. One story that we cut to was really kind of this overall thing that Decrypt just reported on, talking about the valuation. When you look at the numbers, it is a real thing, is that there were some stocks that were outperforming Bitcoin last year. What are your thoughts on where we see the investment strategies for a crypto investor these days? Do you feel like stocks and bonds are still going to be a good mix, or what's your feeling between the weight of the two markets?
Well, I think it's definitely important to think about why people first got involved with cryptocurrency. When people like myself first got involved, it wasn't thinking, what are the potential gains? What are the trading strategies? All of this. We were just looking for financial sovereignty. We were looking for
Right.
money that wasn't in the hands of government, because actually we just had the 13th birthday yesterday of the first ever Bitcoin that was ever mined. And if you look at the Genesis block, what was coded in to the Genesis block was a Times article of that date from 2009 that said Chancellor on brink of second bailout for banks. Now,
Yeah.
I don't know if it's hitting alarm bells for you, but we're in an eerily similar situation right now. We have seen unprecedented money printing. It's crazy what the government is doing right now. And inflation is a real issue. So for me, rather than looking at day-to-day trends and whether or not stocks are overtaking, because this has been an amazing year for technology as well. Everyone's working from home. Technology is like a booming industry right now. But Bitcoin and other cryptocurrencies remain a way for people to maintain control of their own money. And I think that's the real value there. And I think that rather than looking at day-to-day trading strategies, look at the amount of money that the government's printing. Are they planning on slowing down that printing press anytime soon? All of last year, we heard about the tapering. We heard that, it was coming in October. And then it was like, we'll hold off a little bit. And then they're like, we'll need to keep it going a little bit more. Meanwhile, we're hitting 6.8% inflation. And
Hmm.
that's a really scary number. If over the last 12 months, 40% of all US dollars in existence were actually printed in that time, that's a really large number. And if you look at all of the charts that the Fed puts out that actually shows not just the amount of money, so you can look at like M2 money charts, and it just kind of went over these last 2 years. That's terrifying. What's also terrifying is looking at the velocity of money charts, because
Right.
you've seen, really low velocity, and basically Federal Reserve, they're paying banks to hold on to that money that they're injecting into the banks and not, spend it out. But they've just been handing out a bunch of stimulus checks. Everyone's got money to slosh around, and velocity of money chart, it actually hasn't picked up that much. When that, starts to pick up, when that money starts circulating, I think we should be worried. So if you're wondering about like the future trend of Bitcoin, whether it's a good investment, I can't give you, trading advice. I'm really not in that game. All I'm looking at is the underlying value. And I think that as long as we still have unelected bureaucrats printing a bunch of money to fill the coffers of whatever politician's wish list is of the week, we should be looking to assets that diversify out of cash. And Bitcoin is definitely a very interesting asset for that.
Yeah, I think the macroeconomics, continue to prove out over time. If you look at all the different kinds of cryptocurrencies that we track on this channel, we do a lot of trading, but we also do a lot of deep dive analysis. One thing that is very interesting to us is when we connect our own data metrics, which are unique to more of the sentiment side of things. So it's kind of that
Mm-hmm.
Metcalfe's law effect, the node effect of what's happening in cryptocurrency in general. And consumers, meaning retail traders, guys, people, you, are all in the same boat, in the sense that they are having more and more confidence in cryptocurrency as a whole. And are you seeing, when you talk, I guess, when you talk with leaders around the industry, and also within the general population of people, maybe that it's a first time into cryptocurrency, maybe it's their first time they've ever even considered buying a Bitcoin. What are you seeing right now in terms of 2022? Do you think we're going to see continued adoption at a high speed, or do you think people will peel back a little bit?
Well, that's such a great question. Again, I think it depends a lot on what the Federal Reserve is doing because Bitcoin's entire use case is to kind of provide a hedge against that. That's why it was invented as a
Mhm.
hedge against whatever the government controlled money and whatever the politicians were doing. And so if they keep, using this experimental monetary policy that they've been diving into ever since '08, just astronomical money printing, but then the 2020 2021, the money printing we've seen there is just on a completely different scale to anything that we saw in '08. So as long as that continues, I definitely think that Bitcoin is incredibly interesting. But we also have to remember that cryptocurrencies are not all just carbon copies of each other. They're not all just
Right.
trying to be currencies either. We've got a huge amount of different assets out there trying to be fundamentally different things. And so you've got the whole Ethereum boom, and you've got the world of DeFi, you've got the NFT boom going on. You've got all kinds of different projects springing up that find ways to use this technology that decentralizes trust and apply it to different industries. And
Yeah.
so there are fundamentally different financial tools out there that are not necessarily just currencies. So I think that you also see a huge boom in DeFi right now because people are
Mm.
looking at their bank accounts and they're saying, why am I not getting any interest on the money that I'm putting in there? Also, why is my money losing 6.8% a year? This doesn't add up. Maybe I should park that money in something else. They look over at the DeFi world. You've got like yam tokens and spaghetti tokens and bolognese yam spaghetti token and whatever else you can even imagine. But they're like, we're offering 200% annual yield. People are like, what's yield? What's
Hmm.
interest? They're
Yeah.
not used to this because we haven't had it in American bank accounts for so long. So people are diving into this world. I think that they're diving into projects. Some projects have much lower yield, and obviously they're the safer bets. Then you have these astronomically priced yields, but you have to understand the risk that you're taking by diving into them. Has the code even been audited by anyone? Is anyone vetting this stuff? There have been so many DeFi rug pulls. I think it's super important before consumers get into anything that they actually are sure that they understand it. They've looked into it. They've looked at people that they trust who have vetted this code because this is all software
Right.
and there can be bugs. There are always bugs in software. So it's just a really interesting world out there. So many different offerings because of things going on with monetary policy at the moment and government regulations. People are doing a bunch of regulatory arbitrage by going to assets that are currently unrestricted to them. The SEC has all of these accredited investor laws. You have to be really, really rich before you can invest in certain products. And then crypto comes along and it's like, actually, we're completely decentralized. Feel free to invest in us. There's no one going to stop you. And people are
Yeah.
like, what? You don't have to be rich to become rich. This is open to everyone. This is like a game changer, taking down the barriers to entry. And so I think that it's so exciting to see the blossoming of all this tech, the different innovative financial tools that are being developed, things like DAOs, decentralized autonomous
Right.
organizations. Like it's a whole circus.
Well, I think the advantage that I know our audience seems to love is it's kind of the dynamic of what's happening in the space right now. You've got like any good financial instrument, you're going to have sectors that are doing much better than others. Like currently right now, Bitcoin trading somewhat flat. Yet at the same time, you've got metaverse, crypto gaming, NFTs, things of that nature that are starting to move in certain aspects of it, along with DeFi. I think in the essence of where a lot of people are looking to for crypto yields, things of that nature. What are your takes on this whole evolution of banks, especially around Bitcoin? Because we've had a couple of banks on the show here. One of which that I'm talking about right now is that they started to transition to actually allowing you to purchase crypto inside the bank account itself, having immediate access to these crypto yields, and that kind of movement in the banking area. Do you feel like there'll be more banks jumping onto that in 2022, or do you think it's going to take maybe another year to really see good adoption?
That's a great question, and it's so far removed from even 4 years ago, 5 years ago, when banks were systematically shutting down the accounts of anyone involved in crypto. This isn't just US banks, but all over the world. If you were involved with crypto, I remember having my money frozen in Australia because I tried to send money to, a crypto exchange back in 2013. And the government, the bank was like, no, we don't deal with this new cryptocurrency thing. They were not having a bar of it. The reason is because it threatens the banks. This is a tool that enables the payment across the globe instantaneously of value, the transfer of value, and you don't need any intermediaries. So banks operate because they have access to these existing financial rails. They can use all of these systems that can send cross-border payments. If you wanted to send money to someone in another country, you can't send cash in the mail, right? It's very difficult to move cash even within the same country. And so banks operate by kind of having this cartel, this monopoly over these financial rails. And crypto comes up as this aegreous system, meaning like outside of the existing system. And it says, hey, you don't need access to those financial rails. You could just do it directly. There's no middleman. There's no one to seize the money. There's no one to ask permission to whether or not you can send that money to a family member who lives in Venezuela or Russia. There's no permission to be asked. And so that's hugely threatening to banks.
Yeah.
I think what we've seen is not banks get involved at all with the ethos of cryptocurrency, but they have seen that consumers are demanding this stuff, and they would be really silly to ignore that demand. And so I think it was JP Morgan put out a report end of last year that said, yes, we're offering all of these tools to institutional investors, and they can now buy assets through us and all of this, but we haven't actually seen the demand yet. So it's interesting that they're kind of fingers up to the wind. They're trying to decide what customers want. They want to be on the bandwagon. They don't want to miss it. But yet they haven't actually seen people want to go through them. And I think that's because a lot of people who are getting into crypto at this stage are realizing that there are easier ways to do it than going through a bank. You don't actually need these middlemen in order to get assets. You don't need the banks anymore. You don't need them to lock up your money, to keep it safe. You can have all your money in digital form that's secured by yourself. And so banks, although they're trying to ride this train, I think that, it's just crypto provides a way around them. We don't really need them and their high fees and their bureaucracy, and people have just found better ways to move money now.
Yeah, well, definitely the adoption curve. I mean, I was just looking at an article here, 16% of Americans say they've invested in or traded or used cryptocurrency. So I think that was just a recent piece on Pew, which to me kind of is in alignment with what we've seen around the whole idea around Bitcoin and just kind of the adoption curve that we've seen and the pressure that you mentioned of banks getting, a little pushback from, and even though we talk about it here in our crypto pit constantly is because we're always trading and doing different, tests and scenarios with different kind of banks and different kind of currencies. One thing that I've found is that we're finding more and more banks who are not allowing you to do direct crypto purchases. Like if you do a crypto.com account, a good example is many banks now are not allowing you to use your credit or your debit card or your credit card to do a direct purchase, but yet you can do an ACH, to transfer your money into it. So it's going to be interesting to see kind of the evolution, because I think this is the year that banks will either open up to it or continuously put the brakes on, and we'll see some other financial institutions, whether it's companies like BlockFi, Celsius, or BlockFi, Celsius, et cetera, kind of go in that direction in terms of yield and all the good parts of where this might go. Just so
just on that note, when you're talking about yield, I mean, the government really is probably going to be the determining factor. They have their pet banks that they love, and they want to ensure that they keep their nice little monopoly there, and don't get threatened by any crypto companies, because obviously these banks are giving giant donations to a lot of these politicians. What we've seen is the government come in and systematically shut down the companies that are trying to do similar things. They're trying to, do loans, and suddenly the SEC is like, oh, a loan in this context, oh, that's a security. It's like, since when is a loan a security? What are you even talking about? But they've preemptively shut down what Coinbase was doing with their Earn program. Right. They've shut down Celsius. You have all kinds of different state Federal Reserve banks filing cease and desists to places like BlockFi, Celsius. They do not like these interest-bearing accounts at all. And again, I think it's because it's threatening to the banks.
Naomi, what are your thoughts on I mean, obviously, we look at most of our audience here in the US, but we have a large audience overseas and abroad. This is something when I look at, and it was in my predictions piece of just where we'll see uptake in blockchain and also just blockchain tech, but also in cryptocurrencies in general being utilized as monetary systems. Most likely not the United States in the next 5 years. The likelihood of a hotspot that could emerge as a new financial powerhouse in an emerging country, is there any particular sector of the world that you feel is leaning toward that, whether it's Bukele in El Salvador, Nigeria, what we've seen in Africa around, mainly because of just pure necessity? You know, it's different when you're in the Western world and you don't have those needs out there. But what are your thoughts on where the potential for Bitcoin and other cryptocurrencies could really rise in the next few years?
That's such a great question, and it's divided into a couple of parts because one part of that question addresses where in the world has good crypto regulation right now, which
Yeah.
governments are fostering innovation, allowing safe harbors, actually allowing these financial tools to blossom. That's not the United States at all. But then the other question is, where is cryptocurrency being used? We sometimes neglect the fact that Bitcoin emerged as a peer-to-peer cash system. And so it is being used in parts of the world as peer-to-peer cash. Other cryptocurrencies are being used as peer-to-peer cash. I would say the three places in the world where it's actually being used for everyday transactions the most, I would say New Hampshire. There is a robust crypto community in New Hampshire. You can go into a bunch of different stores and they'll accept Dash and Zcash and Bitcoin Cash and whatever else you want to pay in. I would say that Townsville, Australia is another
Hmm.
weird one because it's tiny, but they have a really robust Bitcoin Cash community. And then I would say El Salvador, although I don't like the mandate that Bukele put
Right.
forward that necessitated that places have to accept Bitcoin at point of sale transactions. That actually takes it beyond just being a legal tender law and takes it into mandatory tender. I don't
Yeah.
believe in mandates. I'm definitely not a fan of governments coming in and dictating what stores can and can't accept. But despite all of that, that is a hotspot for crypto usage every day. It hasn't expanded well beyond Bitcoin Beach at the moment, a place called El Zonte. But in El Zonte, it's booming. You go to like street vendors, they have strike signs and they have lightning
Right.
signs and Bitcoin signs, and that's exciting. But even at the airport now, like at major chains like McDonald's, for example, you can pay with Lightning. So they're the three places where it's booming as part of everyday transactions. In terms of regulation, in the US, you do have a little bastion of hope in Wyoming. People like Caitlin Long, who's the founder of
Right.
Avanti Bank, she has been such an incredible trailblazer in just setting up some great laws. She was the brain behind the Special Purpose Depository Institute, which is like the crypto bank that
Right.
enables banks to get direct access to the Fed. They're considered a nationally chartered bank, although the Fed is dragging their heels on that and up against a lawsuit potentially for dragging their heels. But Wyoming is really interesting. Outside of the United States, it's interesting because laws change. So this is a very dynamic question to answer. Early days, people would say Switzerland, Zug. Ended up that wasn't the case. Although you had a mayor in Zug that was really crypto friendly, the rest of Switzerland was super conservative when it came to
Hmm.
finance and was like, oh, crypto, no thanks. You have places like Slovenia that set themselves up as being, around 2017, 2018. They were like, oh, we're going to be Bitcoin City. And they had all these great legislation in the works. Then they just kind of dropped the ball. The same thing happened with Malta. Malta was poised
Yep.
to be a really great place for crypto. The governments get scared. In this case, the government was actually pressured by
Mm.
FATF. They said that they were going to grey list Malta for their cryptocurrency involvement. They then backtracked that and said, oh no, it actually has nothing to do with crypto, whatever. But the government got scared out of it. They dropped their whole legislation to do with crypto. So it is difficult to find places that are willing to embrace it because it's not like countries actually have sovereignty over legislation. They seem like separate countries, but we have all these global organizations like, the IMF, we have the World Bank, we have
Right.
FATF. These are global institutions with member nations, and those member nations can all agree to sanction a country if they don't abide by the same rules. So you end up with a startling amount of homogeneity, whatever that, you know what word I'm trying to say. It's the same across the board. You don't have a lot of difference in terms of regulation for a lot of these places. Meanwhile, you have El Salvador come out of the woodwork. They're a little bit of a unicorn because they have two parts. They're very crypto friendly in their regulation, and they're using crypto every single day. Very
Right.
interesting place in the world. Places like Gibraltar are small enough that they could be nimble, and Cayman Islands as well. A lot of places like that are small
Hmm.
enough to perhaps have potential. The other side of things that you mentioned, I'm going on a bit here, but just two more places. You mentioned out of necessity. I completely agree. That's the other place that people are not looking right now. If you look at what's happening in Nigeria, if you look at what's happening in Venezuela, crypto is a lifeline for these people. Crypto has been banned in Nigeria, and yet it's still used every day for transactions. It's really popular there. And Venezuela as well, the government's really cracked down on crypto usage around like 2015. You started to see mining booms there because there were government caps on the price of electricity. So it was like having a money printer in your basement until the government realized that this was going on. They banned mining. Then they said, okay, we won't ban it. We'll just nationalize it. You now have to do it in our government national pool. You get like a percentage. We'll throw you, some crumbs. But in those places, you're finding that crypto is a lifeline. It's actually used day to day of making payments. It's really interesting to see this divergence of worlds. This Western world where people are like, my bank account's fine and my credit card works totally fine at stores. And I get that. I totally get that. But then you have the real use case, and you
Yeah.
show the power of cryptocurrency in places where we've proven it can't be shut down, where it's helping become a tool for freedom for people. And we see why cryptocurrency was invented in the first place, not just as a trading tool, because it gives people real freedom with their money.
Yeah.
So it's really exciting to see that play out.
Yeah, I want to bring this back home here on this last question too, because I think you're right. The whole point is that we are seeing, these bastions of spots around the globe that have, special needs in the aspect of use case, whether it is regulatory scenarios, a play on trying to edge up in the EU. If you look at Estonia, some of those countries who have really adopted where they're trying to create crypto companies. Then you look in Asia, Singapore, all throughout Hong Kong, et cetera, that have kind of got into that embracement of kind of the play to earn community. So I see a lot of that growth, but when you bring it back home here, and mainly in the US, in the sense of, where is my investment dollar going to go in the near future? And I was just looking at this tweet right here from Kathy Wood, big fan of hers, and just kind of where her brashness has been around cryptocurrency. And she's mentioned a couple of things here. Fears of inflation, she thinks, is going to give way to fears of recession during the next 3 to 6 months. If we see recession kind of become a scenario here, because inflation right now obviously is it's a real thing. We are seeing this happen, and it's really the first time that we've seen these kind of double-digit numbers since 1980. What are your thoughts on how that will affect the hedge side of Bitcoin price?
That's a great question. Kathy in the past has also predicted deflation, which, I always take, like, I love her, but I sometimes take these predictions with a grain of salt, because as long as the government is continuing to print money, that's literal inflation of the money supply.
Right.
So you dilute an asset, it becomes less valuable, right? And so, first of all, I don't see inflation giving way to anything in the near-term future. Inflation is one of those weird things where the government pretends they have control over it until they don't. And we
Yep.
actually don't know what's going to happen. You have economists like George Selgin say, yeah, there's inflation, but it's not going to turn into hyperinflation. Then you have a lot of other Austrian economists who are saying, actually, this has a potential to turn into hyperinflation. We really don't know. The fact is that the government plays all of these nice little games trying to keep the velocity of money at a certain rate and the GDP at a certain rate. And they're playing all these games, manipulating the money supply in order to do this. And that's all fine. But at the end of the day, money is valuable because it has a network effect, because the next person believes that they can then pass that money on. And so they agree to accept that money in payment. They believe that they can use it for their own payments. And so it gives that money value. They know that it's easily transferable. What happens in a situation like this is people are looking at the numbers, people are looking at the games that the Fed is playing, they're looking at the opacity of the Fed and saying, we have no idea what they're even doing. There's no audits being done. Like, we don't have access to any of the data. And they're losing confidence. All it
Hmm.
takes for hyperinflation to set in is people losing confidence in the money, and that's what's scary. It's not like the Fed has they clamp down on this and they have a tight control. They have somewhat of an ability to maneuver it, but at the end of the day, it comes down to people's subjective value, uh, and whether or not they believe that the US dollar has value to them, and that could disappear in an instant if they think that
Right.
inflation's running away. That's what the media starts talking about. I mean, it's game over. So in that kind of
Well,
a
then,
scenario,
yeah,
you want to have
you're looking for where people will start to look at alternative means, and that's essentially what
exactly.
you're talking about. That's Venezuela all over.
Mm-hmm.
Obviously, we're not near that in the U.S., but the point is that if we see hyperinflation start to energize, we've never had that in the United States. Even in the 1980s, when we did see double digit, the difference is the printing. We didn't
Right.
have that one anomaly that is the gorilla in the room, in terms of the amount of money that has been printed to accommodate for that and deal with this. But at the same time, I would say that we are dealing with I won't call them sophisticated, but there's been enough instruments put in place now since the 1980s, obviously, to deal with what we've seen, including the 2008 economic downfall we saw with the savings and loans. So there has been some things I think that will start to kind of, whether they call it, the question is whether QE starts to lay out and be pulled back. If it in fact that it does, I don't know whether or not that's going to. My point is that I think Bitcoin will be the hedge, regardless of what we see. If we see light inflation or if we do see hyperinflation, then it's an automatic. But definitely going to be something very close to watch. Definitely good having you on the show today for sure. And we definitely want to
Well,
pick
thank
your
you so
brain
much for chatting with me.
in the future for sure. Thanks again for stopping in. We appreciate it.
All right.